What's up, you guys? In this video, I'm going to talk about how to navigate the stock market crisis and how to buy stocks where there's crazy volatility right now in the stock market. At one point, it was down 25% from its highs. So don't forget to subscribe and let's get right into the video. Following the 1-2 punch of the pandemic and the oil crisis, the markets have come down as much as 25%, and that's pretty huge. So for all of you out there that were already invested in the market, hold on. What you own is real, tangible businesses, factories, real estate, real assets that have actual value. So don't be scared and sell everything you have. I beg you, do not sell into the fear. Stay strong, as this could last for a while and it could get worse. However, I do want to say that this is a great time to buy stocks. Let me tell you something. All the big players are buying stocks right now. So far, what I can tell you guys for sure is that Mark Cuban is buying Live Nation and Twitter stocks. Carl Icahn is buying Occidental Petroleum and Hertz. Kevin O'Leary didn't specify what he was buying, but said he had a lot of cash that he's going to put to work, and he's going to buy consumer stocks and industrial stocks as well. And I can bet you anything that Warren Buffett is going to make a huge purchase that we will hear about in the coming few months. As you can see, all these investors invested in different businesses depending on their own understanding of these businesses. The one thing that they have in common is that they all understand that this is investing season. However, these guys don't buy all at once. The whole point of investing is investing at reasonable prices. So when you spread out your buy-in positions, especially at a time like this, you have a better chance of averaging in on the low prices instead of buying it all in 1 day or 2 days. Mark Cuban in his interview said he dipped his toes a little bit, and I'm sure for Mark Cuban that's probably at least $1 million. But the point is that you should definitely start now. And not just that, but you should also be aggressive at this time. You have to understand something very important about investing. When you invest your money when the stock prices are high, your risk is also very high as well. However, when you invest your money when the stock prices are low, your risk is lower as well. People are more comfortable investing in the stock market when the prices are high because everything is going up. It's harder for people to process any buying decision right now because all prices are going down and they're losing lots and lots of money. For me personally, I started feeling scared of the high market prices for 2 years now. So what I did is that I started piling up more cash and investing, but just a little bit at a time, and keeping that cash position for when it is needed. And to be honest, I felt like a complete idiot because the markets kept going up and up and up and up. Then I saw in the news that famous investor Ray Dalio, who runs the biggest hedge fund in the world, put a $1.5 billion short on the S&P 500 by March of 2020. A simple explanation of that means that he will make money if the stock market goes down by March. And oh man, was he right. I read Ray Dalio's book Principles, which made me really respect him as a businessman, and I was also introduced to him by another book called Money Master the Game by Tony Robbins. Both excellent reads for any entrepreneur or investor that wants to get more knowledge. I'll put a link in the description below for both of these books if you guys want to check it out. I definitely recommend that you do. They are amazing value for anybody. So let's get back to the story. So when I heard that he shorted the market like that, I kind of followed in his footsteps by selling half of my portfolio in January. And boy, I'm happy I did that. It's always good to be following people that you think are credible. I started keeping cash because I saw Warren Buffett doing so, and I sold half of my portfolio because I saw Ray Dalio shorting the market in a big way. Remember though, to always look into investors' actions and not just what they say alone. And try to distance yourself away from all the noise that you hear on CNBC or Yahoo Finance or all of that. As I said in my last video, focus on high quality companies with healthy balance sheets. And if you have these companies in your portfolio already, even better, just keep investing in those. And it's okay if your favorite company is not down as much as the rest of the market. That just means you have a great company. Ideally, you'd want to buy companies at prices where you haven't seen in years. And that's the case with Disney right now. So Disney is one of those companies that I sold in January, and I bought it originally in the first place because I believed that it had great fundamentals and great future prospects, especially with the launch of Disney Plus. Let me know in the comments down below if you guys want me to do a full analysis video on Disney. And guys, if you like this video so far, hit that like button and subscribe to my channel. I would really appreciate that. Let's get back to Disney. Disney stock dropped down to a price that I haven't seen in 2 years. That is of course due to the virus fear effect and the impact that it has on Disney amusement parks and cinema attendance for all of Disney's movies, which will absolutely have an effect on Disney's short-term results. And yes, it might take some time for people to gain back the confidence to go back to the amusement parks and the cinemas, but you and I know that when the pandemic is over and we have that vaccine, Disney will operate as usual and will deliver great results. So what I chose to do with Disney is I started buying in, and luckily one of my tranches was at 92 at the worst day of the stock market, but I only built in half of my target allocation so far. I will continue to buy on a weekly basis, especially on the really down days, until I reach the allocation that I want for Disney. Everyone might have a different allocation for their stocks, but make sure you know what that is. Whether it's 10% or 20% or 5%, make sure you have that allocation in mind when you're buying so you don't overbuy or underbuy any of your positions. I normally buy on a monthly basis on regular times, but right now it's different. I think that the fear is at its high or close to its highs. It will get worse when people in the States start getting tested and they find more and more cases during the next 2 weeks. The strategy that I'm applying with Disney right now will also be used with a few other companies that I'm laser focused on at this time. Don't go out and try to buy 10 or 20 companies at the same time, because you won't be able to apply this strategy if you're buying too many companies. So just focus on 3 or 4 max. I'm very interested in knowing what you guys are buying right now, or if you're watching this in the future, what are the companies that you bought? Let me know in the comments down below. That's all I have for you guys today. Thank you for watching. Don't forget to subscribe to catch all the future videos, and I'll see you in the next one.